All right, welcome back. Let's talk about another opportunity, shall we? Is this gonna exit? Gonna exit? No. Stop. Sick of making videos, guys. Oh. All right. I'm not redoing it. I'm not. Well, I just lost that. Okay, welcome back. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. Hopefully my sound works. I don't know. I just spent 2 hours on it. I could be wrong. I'm never always right. Do not invest anything you're not willing to lose or lose sleep over. No position sizing. No leverage. No. Know your own risk tolerance. Let's just say. FOMO buying is usually ends up it usually ends up with you being wrecked. I don't know what to tell you. Don't chase pump and dumps. Everything's in a bubble. The world, you know, the world. It's a clown show. But don't lose your head, because usually when times are the worst, the best opportunities arise. All right, so let's just talk about the opportunity. The price action, you guys have seen it before. Yeah, over 400x, it's possible. I think there's another opportunity coming up to do something like that. Maybe more, maybe less. I mean, even 100x, I'll take it. That's for private members. So last night I couldn't sleep. I was game theorizing how to play this, because there's this opportunity coming up maybe in a couple months, or actually you'd probably want to jump on it as soon as possible. So I was thinking of ways to take advantage of something new, and I'm gonna upload that video after I upload this. I can't make any promises, or I'm just theorizing game theory, because there's some strategy involved with something new coming up in crypto. I think you could easily, I don't know, we'll see. Anyways, 20% off for now for this weekend, and then I'm probably going to put it back to regular price. Because, these opportunities, for the last opportunity, not many people, a handful, listened to me. The one guy bought a ranch. I mean, good for him. They don't come around often in your lifetime. Like, you could hold Bitcoin and hope for another 50%, but I'm not willing to risk money in crypto unless it's like hundreds of X, which is tens of thousands of percent gains, right? It's the only way I'm gonna risk any money in it. So that's exciting. On top of that, it looks like gold and silver, they're really doing everything they can to hold it down. Because once they lose control, the party's over for them. Party starts for us. But mining stocks, they have best earnings probably in the entire market, but nobody talks about it in mainstream media. Tech stocks, they beat earnings again. Here's the thing, though, with earnings. As they print more money, it's like smoke and mirrors for balance sheets. Because, yeah, earnings are up, revenues are up, but it's because inflation is up. Because it costs more money for people to buy things, and then on their balance, and then their debt sort of gets wiped out. So if you're holding debt, right, and the interest on it is less than inflation, then it looks like it kind of pushes revenues up for companies and makes their debts go away. That's why they take on as much debt as humanly possible and do stock buybacks. Yeah, that's why the market keeps going higher. Besides, who else knows what they're doing? Um, but it's all smoke and mirrors because when you realize the gains on your stocks or your stonks, depends what bracket you're in now. Uh, the cost of living is only going up. Home prices only go. We're gonna talk about homes and real estate. I want to talk about it because I've been looking at it and I'm trying to figure out, are we gonna have how can this keep going? The home prices just going higher and higher. Are they gonna crash like they did in 2007 and 8? Anyways, I was looking at this for a second. Here's just a good visual. Technology is red. As you can see, here's Apple. Here's Intuit. Really? Oh no. This is, of course, Microsoft. Gates. He's also probably the biggest farmland owner. Alright, so here's NVIDIA. They've gotten big recently from crypto because they make all the mining hardware. You can see how big visually these market caps are. How much money's in tech. This is utilities over here, the little purplish or pinkish color. Tech is obviously the largest. What's the second largest? Well, I'd say it's communications. Got Google, Comcast, Facebook up here. And then third is consumer cyclical. Tesla, Amazon, Home Depot, Nike, right? The people, controlling everything. Financials, people think financials is the biggest, but it's not. This is financials, it's the green. The blue is like Target, a bunch of just Estee Lauder, like a bunch of stores, right? That's retail. So consumer defense, well, that would be Pepsi and all them. Oh, here we go. Chevron, no, that's Chevron and these companies right here. Not very big, very small. Or is that energy? Look at industrials. Here's industrials. It's hard for me to see with these glasses. These are like UV blocking glasses. But you can see it right over here. You can just go to FinViz and look at this yourself. But I want to show you guys. Take a look at another sector. Let's look at the Dow Jones. This was the S&P. The largest weighted cap is Apple, and then Microsoft in the Dow. Here's JP. There's Johnson Johnson. So the industrial index isn't really very industrial. Doesn't look like to me. I mean, there's still some in there, right? But they're weighted very small compared to. I guess Apple, they do make a lot of laptops and phones that is sort of industrial, but I think of it as tech or electronics, right? Consumer goods. Salesforce, that's over there. All right, you guys get the point. take a look at real estate. Oh, there's nothing. All right, hold on. Take a look at give me a second. Give me a second. Look at gold. How big is gold? Not that big. And if you look at the market caps, the largest one is only about 50 billion, right? And that's Newmont. Second would be Barrick. And then there's Franco-Nevada, 26 billion. That's nothing. I mean, just one of the tech companies is about 1.6 trillion, something insane. All right. Just wanted to give you guys a visualization, like the comparison. So it takes 1,000 billion to be the equivalent of just one of these major tech companies. Let's take a look at it. How big is silver? Silver even in here? I don't think so. Because there really aren't that many. I mean, there are standalone silver miners, but I don't see anything for it. Or maybe it's down here. Nope, I don't see it. Take a look at uranium. Only the largest company is 6.6 billion. That's it. I don't know how they're going to power this smart city, electrical cars, everything powered on electricity without going for uranium, and that market's looking hot, looking good. I mean, you guys, there's so much to look at. Anyways, let's talk about housing. So millennials are in the US. Now this kind of goes along with Europe and the rest of the world, as in demographics, like the age ranges, like these you know, you have the boomers, right? So they came after World War II. And that's because after the war everyone had like a ton of kids. And same goes in Europe and everywhere else around the world. And they created, well, some of them created Gen X, and then a lot of them millennials. Millennials is larger than Gen X, right? So, just looking at this, I mean, the numbers are kind of overlapping. There's a lot of people who think it's different years, but I'm just gonna go off the Pew Research, or what is this? Yeah, Pew Research. Millennials are 1981 to 1996. That's the age range. Gen X is 1965 to 1980. I'm like, it sucks because I'm technically a millennial, but I'm not. I'm like, I was raised different, right? I was raised by Eastern Europeans, and I feel like I was raised more like a Gen Xer. Like I had real ass whoopings when I was a bad kid. Like I did not wear a helmet riding my dyno, right? I was doing backflips and stuff on like half pipes and breaking bones. Just getting in. I grew up in dirt, playing outside. There were no cell phones, nothing. Like everyone just played outside, literally in the middle of the street. If a car came, you just got out of the way and they kept driving. And, you know, we played kickball, hockey in the streets until we would even stay out past the lights, you know, turning on the streets. And it was a different upbringing. But I think I had it the best. I mean, 80s kids had it the same. Pretty much the same. Right, which I technically was late 80s, very early 90s kid. So, but the moral of the story is the millennials need to, are like in their late 20s or mid 20s to late 20s and early to mid 30s. So the ones who do have money, high income earners, they've probably all bought their homes already and are starting to have kids. I can just see it from my personal friends and people I know, right? In my age range. The late 20s millennials, they're starting to buy their starter homes right now, right? They're getting out of the cities and then doing that. I think the younger ones are kind of, they don't have the same opportunities, or they couldn't get their foot in the door and get high up on the food chain in the corporate world or wherever they work to be making enough to maybe possibly get their starter home. Although there's always exceptions, right? But I think probably somewhere anywhere below like 26 and down, they're probably moving back with their parents or just renting at this point. And they probably don't have the savings, or they're gambling with Dogecoin, but losing it all eventually. But they don't really have the savings or the credit to get their first starter home. And that's just that. I doubt the dating world is what it used to be. It's probably really hard these days. I feel sorry for them in that sense. So where is all this demand coming from to push all the home prices up, right? The people getting out of the urban areas because we just had the coof and other things, right, going on. Some chaotic things might be happening in the urban areas. So the high income earners, and that could be anyone from their late 20s to all the way into their 60s even, or 70, or well, I'd say late, somewhere in their 60s and down, are probably moving out more into the suburbs. And they're pushing the prices of homes up and up and up. Now, what does this do? This pulls future demand into the present. So, let me show you. Let me draw some. Okay, well, this is a housing chart right over here. I'll talk about that. That's housing starts. But I'm just going to make a couple squares here. And this is representing every year going into the future, right? Like, let's say 4 years into the future. So let's say there's demand for, like 5 million homes. I'm just making numbers up right now. I'm just talking. I'm giving an example. There's demand for 5 million homes this year. And estimated, as cyclically things go and there's population growth, and there is population growth because we do take in immigrants. But as the housing demand is here, right, it does grow with time. Now, the millennial generation, it's not as big as the boomer generation. That's the biggest one. But they're a decent size, right? But that doesn't account for all of the immigration that's coming into the U.S. And some people are like, oh, well, they can't afford them. Well, maybe 20 people live in a home. That's how they do it. So the demand is 5 million this year. This is in a normal environment. Nothing happened in 2020. Let's pretend. Okay, so let's say the next year the demand goes up and it's 5.5, right? And then it's supposed to be 6. And then maybe it jumps. More millennials have a lot more kids. And then, there's a little bit more demand. It jumps to 8 million for homes. Okay. Well, what happened is all of the demand from, let's say, the next 2 to even 3 years was pulled into the present from the future because things got a little hairy, got a little, you know, things got a little interesting in 2020. So it pushed all that demand into 2020 and 2021 this year. So people who are thinking about moving in a couple years, or they're thinking about upgrading, or a lot of people are getting older, getting into their 30s, and they're like, all right, well, I need to get a starter home so I could have kids, this and that. Well, they fast tracked that in the last year, and they're doing it this year because they're thinking ahead. They're like, well, I don't want to be in the densely populated areas because for many reasons. I think you guys could guess, And what if there's more lockdowns, this and that? People don't like that, right? They want to. It's human nature to want to be able to go outside of your home and feel safe and be out in I don't know, a nice environment where birds are chirping, and you could breathe some fresh air. All right. So a lot of demand was pushed into last year and this year. And then there's other forces. You could say blue cities taxes only go up a lot. And you're thinking, well, I want to front run this because if they're only going up, people are going to leave and then the prices are going to drop. So prices of home, like urban areas and whatnot, prices there are probably stagnant or falling. It depends, it all depends on many, many things. Your local region, geographically, what's going on in that area, and, the politics, this and that. But on the national scale, you can see a lot of people went to Florida. Why? Because they've been free. It's been 2019 there since this time last year, practically. Maybe not this time, but let's say June. Things have been back to normal there, right? So a lot of people flock there, and other states like it, right? So a lot of demand has been pulled from the future and put into the present. Now, if you think that's it, there's more to this, all right? So I just drew on a chart that I wanted to talk about and show you guys. Maybe I could, it's kind of not, all right, doesn't matter. All right, let's take a look at a few more tabs I have open. So you can see here historical data for housing starts, the supply. So this is what the supply side's doing, right? The construction workers. What are they giving us as supply? Well, it's gone up since 2010, right? Since the bottom of the housing collapse. But it's not really that high, let's say, historically, considering, prior decades. Like, all the way, it was higher, the supply coming onto the market in 1968. Was higher in 1980. Well, yeah, it was higher in the 1980s, 1990s, early 2000s. So we're still not building homes in the US like we used to. I don't see that many homes starting up. And honestly, as I look at these new homes being put up, it's usually just a person doing it and hiring some contractors. It's not like big companies just starting cookie cutter developments that I highly, I would not ever want to personally live in. And then, these new homes they're building, even the homes they built in the 90s and early 2000s, they're not built as well as the 70s homes or the 80s. It's just cheap particle board, and I don't want to get into it. But anyways, so new homes sold. So this isn't a very accurate chart, but gives you a good idea. I don't think it goes into 2020 in this year. But I have more charts. So a lot of things, right? Mortgage rates, building materials. So we know building materials are going through the roof. Mortgage rates are historically still very low because the Fed keeps rates low. But every time you see the 10-year yield spike on bonds, rates go up. But here's the thing with the mortgage rates. Are banks lending to people? Not really. Why is that? Because they're not stupid. They know that people aren't going to be able to pay these homes off. Can they? And lending standards are still pretty high since 2008. I mean, can they lend out to anybody with ninja loans and chop them and dice them, put them in tranches, and sell them all around the world to create a global financial crisis again? No, they can't do that anymore. Will they? Here's the variable that we don't know. Will they just literally do it again? Just ease the standards and let them do it all over again? I don't know. And would they do it again? I don't know. Probably they would, because they'll get bailed out in the end. I don't know. But as of right now, if this stays constant, where the banks need verified income, really high FISA scores, credit scores, you need a decent amount of deposit. I don't think this bull market in housing prices is going to keep going higher. There will be a dip or a correction in it, because right now we're just pulling demand forward from the future. And if and honestly, as the price, so a lot of people are like, yeah, but house prices are only going to go up because of inflation. Yes and no. Yes and no means exactly that. Why? Well, if the cost of living keeps going up, if every time you go grocery shopping, you're dropping like a quarter of your paycheck, and your utility bills are keep going higher, and then eventually everything starts going up in prices. Well, then you don't have extra income and you can't save money. And if you can't save money, how are you going to put down a down payment? And then you get fearful, like, well, I'm not going to be able to afford the home. And then there's always repairs, endless repairs. And then, you have to look at property taxes. Schools right now, they all want to raise, that's why you pay property tax. They keep raising their, the amount you need to pay every year. Why? There's less kids than a few years ago. If you look into the demographics, it's because because the teachers want more money. And people keep putting up with this. Why do they put up with this? Well, the same reason why everyone wears a diaper on their face, because they don't have balls. There's no real men left. All right, no one's doing anything about anything. Everyone, we live in the time of decadence and weak people, and then all of a sudden they can't understand, and then they point a finger. They're like, "Oh, it's the entrepreneurs, it's the free market." No, it's you. You're the problem. If people who don't care about what's happening are gonna get fleeced, and it is what it is. That's why I tell you, everyone who watches me, you guys complain and complain. What have you done? What have you done, millennial? Like, honestly though, but if you don't go out there and make a change in this world, run for local, I don't know, something. Go to the teachers' things where you guys vote and make a difference. Whatever. I really don't care. At this point, I'm just looking forward to everything just shit hitting the fan, and that'll be the correction, the universal correction. And I know it's going to be managed. They're going to try, but it's not going to work. Anyways, household incomes, is that going up? From what I see, for the middle class, an average hardworking person, your pay raises they're really not there. People aren't making any more than they did 10 or 20 years ago. Meanwhile, inflation's probably running like 8% year over year. The only people who are making more money are high income earners who are like financial officers for big companies or medium sized companies, people who deal in like finance, this and that, and marketing. But all of that's going to go away eventually as well. Whenever this market could dump, or when it's at the point where inflation's so high, your stock gains aren't going to matter all that much. Are there jobs? No, there aren't any real jobs. The gig economy is not real. That's not a real job. You can't live off that. And this and that. Household debt, local market factors, policy. I've sort of talked about that. So here's the thing. What's propping up the market besides a temporary demand from people moving from regions to more free regions within the nation, right? And getting out of densely populated areas. What else is a factor? Another factor in all this is, well, the temporary bubble in the stock market, which coincides with the bubble in housing and real estate, because as long as the markets are up, the banks are willing to keep lending. But as soon as something happens, a decent sized correction, not like kind of like what we had in March, but this time the central banks can't do like such amounts of QE, because if they do, then, well, they will. Actually, they will, and it'll be even larger. Because there's two forces happening here. Deflationary forces are happening where the economy is trying to crash and get rid of these asset bubbles, while they're propping it up with all this worthless fiat currency, right? So that's the tightrope that all these people in charge and Fed officials and whatnot, central bank, Powell is trying to deal with, right? He's walking on tightrope, and he's fighting deflation with printing money, but at some point something's gonna tip and something's gonna overshoot. It'll either be a deflationary crash depression or it'll be a hyperinflationary event. And both will happen at the same time, right? Anyways, and the funny thing is, he was just called out a day ago. What was I looking at here? Well, they do have inflation adjusted charts for the prices of homes going up. Because technically, so a $300,000 home today, inflation adjusted, it's really like a $200,000 home in like the 80s or something. You do have to adjust it for inflation. Although, of course, if you go off of the CPI, because we know that they're not really counting it. They took out a bunch of stuff. They changed it in like the late 80s or early 90s. So it's not calculated properly. So technically, home prices, yeah, they're higher than normal, but they're not really in the stratosphere bubble wise if you adjust it for inflation. The problem is, people think it's in like a bubble because people can't earn money. They can't keep their wages aren't keeping up with inflation. And people are like, yeah, well, my employer needs to pay me more. They can't. If they do, what does that do? It creates even more inflation, because then they have to raise prices to pay you. You have to understand, money is just a measuring stick. It's just a ruler. What is really being measured, money just measures your productivity and your contribution to society. So you flipping a burger in McDonald's, yeah, you shouldn't be making a lot. That's for high schoolers. It used to be jobs for high schoolers. Anyways, what else? So there's the cost of building. This is insane. I want to show you guys. In April of 2020, 200 square feet uh, of to build a deck, 200 square foot deck. To build it, it only costs the materials, the wood, it costs you 936. April 2021, it costs you 3,696. That's a 4x. That's insane. So apparently RV sales are through the roof. People are starting to get nomads. People just living in RVs now and driving around and living in vans. It's really happening. Search it up. I should have searched up some videos. Someone was showing me there was a bunch of people on Instagram or what's the other one? Which? No. What's that app? TikTok. Yeah, like showing their lives traveling and just living out of vans. Like, yeah, maybe it's cool, like if you're young and whatever, but because people can't afford homes, so it's the second next best thing, right? But this is what I wanted to show you guys right here. Why do I not have it? Is that what I closed? Alright, so you could hear the sound on this.
It's just kind of confusing, the question and your answer. The housing market is strong, prices are up, and yet the Fed is buying $40 billion per month in mortgage-related assets. Why is that? And are those purchases playing a role at all in pushing up prices?
Yeah, I mean, we started buying MBS because the mortgage-backed security market was really experiencing severe dysfunction, and we've sort of articulated, what our exit path is from that. It's not meant to provide direct assistance to the housing market. That was never the intent. It was really just to keep that it's a very close relation to the Treasury market and a very important market on its own. And so that's why we bought, as we did during the global financial crisis, we bought MBS too. Again, not an intention to send help to the housing market, which was really not a problem this time at all. So, it's a situation where we will taper asset purchases when the time comes to do that, and those purchases will come to zero over time, and that time is not yet.
Boy, did he sound nervous. Obviously, he didn't have an answer prepared for that. That was actually a really good question. Why are they in the housing market propping it up when prices are going through the roof everywhere? And in the news, in my newsroom, I've shown you guys a bunch of videos making fun of how people are just throwing cash at auction. There's home auctions now, and it just opens, really high, and people are just bidding cash, like 30% over, 40% over the asking price, which is insane. So, and on top of that, we have the central bank in there propping it up. So, I mean, this is horrible for the younger generations. They're like never going to be able to buy homes. But the good news is, I do think this will not last too long. I'm thinking about once inflation really starts running hot and all of the demand, or most of it, has been pretty much soaked up in the past year or two, then prices will have to fall. They'll probably fall next year, maybe in the winter, maybe next spring. And I just have a feeling something's going to happen. Something big, bad, I don't know. something's going to cause a market correction, planned or unplanned. You know what I mean. And then that'll be a good buying opportunity. Because at some point, I mean, unemployment is horrendous. A lot of people are just getting paid, unemployment to not work. People, so for low skilled labor, you can't find anyone to work for you. That's why they're letting people in the country, right? And everyone else is just getting unemployment, playing video games at home and doing nothing with their lives, maybe traveling, whatever. This is not going to end well, and it can't go on for too long. And also, prices are really starting to rise. And affordability, home affordability, once these high income earners, once we've ran out of them, and demographically, there's not that many high earners. I don't know what percentage, maybe it's 15, 20% of the total population. But once they're done buying, which could be now, could be midsummer, fall, once they're done buying, unless they let the ninja loans happen or whatever, the demand will just go away, and it'll go away quickly. And then the prices are going to have to come back down to earth. On top of that, if there's a market correction, a decent one, which eventually will happen, that'll be icing on the cake, and then it'll be like 2007, 2008 all over again, except everything's going to be like imploding. But I don't know. Maybe they'll, and you know what? Maybe if they come out with another, I don't know, 10 trillion, because every time they do this, it has to be more and more to keep it going, keep the music playing. Maybe they'll paper over it and it won't be so bad, but inflation will be getting really bad. I really feel like by 2023, 24, even your average normie is going to be like, what the hell is going on? And then you get that, I'll talk about that. I'll talk about that later. Let's look at some charts. By the way, if you think I'm rambling and I'm going too slowly, you could always click on the settings in the bottom right hand corner and speed up the video by 20% or 25%, 50%. All right. The VIX is a hedge on your account. I'm doing it. That's all I really have to say. As a hedge. Can the market just keep going higher? Sure. But I like sleeping at night. And it does look like the Dow and the S&P is going to break higher. That also means cryptos will probably break higher as well. So I don't even hear any more talk about stimmy checks coming out. At some point, that easy money might slow down for retail investors, not for Wall Street. That'll just keep going. DXY is still at the 90 handle. The 10-year yield did spike this week a little bit, and that's why gold and silver sold off. So this isn't loading. Great. Close some windows. I'll talk a little bit more about some. Well, let's just talk about this now. Now I'm jumping around. Globally, things are heating up. They're really talking nasty to each other. Can you harness the tremendous power of deep ocean volcanoes? Probably not. I mean, maybe 500 years from now or whenever. But you're going to need some serious investment to try to probably harness the heat from cracks in the surface of the crust, the mantle. I mean, anything's possible, right? But the investment to do that, And then there's huge risks, right? If there's a earthquake. But, you know, I do think there is endless energy if we just wanted it, but, you know. So, this meme that she sold it as an NFT for 500,000. You can find this anywhere, by the way. RV sales just hit an all-time high. Still. Yeah, when I drive around, I just see people with like $80,000 RVs. I guarantee you they didn't buy that cash. They're probably swimming in debt. And are they really going to use them? By the way, if you think you're going to like bug out with an RV, do you know how much gas those things take? It's how much. Yeah, I mean, it's actually not practical. If anything, it would just be like a truck, small trailer. But even then, I mean, if anything, if it's like total grid down or something, you're not gonna get gas, and you can't drive around with a lot of it. It's not safe, and it weighs a ton, which sucks up even more fuel, right? I guess everyone wants to go camping. That's what they're gonna end up doing, and then a lot of these people who aren't gonna be able to make payments on these RVs are gonna start selling them for a lot less than they bought them for, and then they're underwater. We have an RV bubble. It's gonna be as big as the mortgage-backed security bubble now. They're gonna have to choose between their RVs or their home payment. I don't know. It's crazy. And you know, a lot of these boomers are gonna have to sell their 401ks and stocks to pay off these RVs. You know what? That's probably their plan. They're just waiting for the right. They think the stock market's going to go up a little higher, and then and then they're not going to take profits. What's going to happen is they're going to wait too long, and eventually one day it's just going to dump, and then they're going to panic, sell, and then take that money and pay off their RVs, or who knows what they'll do with it. Keep financing their debt. Yeah, 16 million Americans still on some form of, unemployment benefits. That's a lot. But it's come down since the beginning of 2020, right? But I think yeah, I guess a lot of people did go back to work, I guess. But they'll get laid off later because a lot of them aren't going to survive, even with the PPP loans. Matter of fact, they have to pay them back. Or the only reason they got them was to pay their employers. But once that money dries up, the loan, and or it turns into a grant, let's say, so it's free, right? Then they'll just let them go again. Or they'll become part-time employees. And then they can't get back on unemployment. Either way, all of this is just injecting money into the economy, and that money's not coming from productivity. It's not coming from exports. The U.S. isn't exporting. It's just importing. Literally. There's just tankers on the coast of California everywhere. And that'll be temporary as well. And, if you order something online, it takes forever to get to you in the mail because there's not enough products. Or the supply chains are broken. Not because of the coof. I believe it's because it was actually better last summer than it is right now. How do you explain that? Well, there's less products and more demand because people have all this extra cash from the stimmies and unemployment because they're getting paid more on unemployment. So, it's bad. I mean, it's bad. So Q1 GDP unexpectedly misses despite stimmy-funded spending surge. That is really, really surprising. that the GDP is still not growing as they expected it. So let me read this. With the U.S. economy overheating in virtually every aspect, with inflation scorching hot, and with retail spending at record highs, all funded, of course, by trillions of fiscal stimulus, it was actually a surprise to see the annualized Q1 GDP was reported at only 6.4%, which, while improvement to the 4.3% in Q4, missed consensus expectations of 6.6%, and certainly missed the whisper numbers, some of which were even the double-digit range. Is this all the growth that $2 trillion in stimulus can buy? Okay, so for one, a lot of people on mainstream media, they're like, wow, look at the economy, it's booming. 6.4% GDP, then 4.3% GDP. Those are high numbers that we haven't seen in decades. But that's because that's the growth coming out of negative growth, right? So last spring around this time, it was like negative 6% GDP. So the only way is back up, right? But what's the real GDP? What's the real growth of the economy? It's negative. The economy's actually shrinking. It's just that we're coming back up from negative territory and zero. So yeah, I mean, it's all fake, guys. Now with the Green Deal infrastructure build out, that's going to give it some boost. It's all smoke and mirrors, though. I mean, just go drive around. I mean, yeah, it seems like things are back to normal, sorta. But people are in more debt than ever. Yeah, people do have some savings and cash. A lot of people didn't spend it because they're fearful. But as they do spend it this summer to take their RVs and go traveling or whatnot, it's gonna push gas prices and everything higher and higher. And there's gonna be a huge hangover, from this temporary sugar high, right? From all this stimulus. I don't really want to get into it. I'll post this in the newsroom. You could read this. Shipping containers fall overboard at alarming rate as supply chains stretched thin. Yeah. So why isn't gold and silver exploding higher? Well, we know why. It's manipulated. The open interest, the shorts, the naked shorts, it's higher than ever before. Why? Who in their right mind would short at record numbers gold and silver when there's a commodity super cycle and all commodities just keep breaking out and going higher and higher? Even lumber, even wood. I mean, if you drive around the US or Canada, there's plenty of wood, right? So why is the price going higher? Why can't they just cut down more trees and supply everyone and make the prices fall back down? Because transporting it, cutting it, the payroll, right? The employees, all of that, the cost of producing is going up. The cost of transportation going up. That's why lumber is going up. Are they gouging? No, but they're the scapegoat for people who don't understand economics, which are lefties, is always, oh, they're price gouging, No, dumbass. There's it costs to make these things. And if people are willing to pay more, then yeah, the price is going to go up. And when you do raise prices on things, you take that extra profit and you invest it back into the business and hire more people and buy more machines so you can meet the future demand of what people want. So when people say, oh, you need to stop price gouging, okay, what happens when you stop price gouging? All of a sudden there's empty shelves. So when you do price fixing, there's empty shelves because that money, when they raise the prices on goods, it goes back into the company so they can produce more goods. But if they can't raise prices, then they can't produce more goods. And then at some point, they're not even making a profit, so then they stop producing. And then there are no goods. It's that simple. But they don't teach you that in school anymore, or universities. Because, they just want the world to end. And it will. And no one's going to have a good time. I mean, nobody. It doesn't matter where you are in the hierarchy. No one's going to have a good time. And no one's going to be able to control what's coming, in my opinion. So here's the agricultural weekly chart. It's been going up. And it's got a long way to go up. This is a very long-term hold for years, I believe. Let's look at crude. It's at a major resistance right now. It's at 64, 65 bucks. Hopefully, it could hold below 65 for a few more weeks, few more months. Just because, nobody wants to see high gas prices. But another thing that could stop this housing boom, and it could cause a bust, and it could really cause a bust in the economy, is if oil keeps going higher. I mean, I'm telling you, as soon as this resistance is taken out, and we're testing 80 bucks, those RVs are just gonna start going on sale in everyone's front yard. And then we are gonna take out 80 bucks. I'm bullish on oil and energy. The question is how fast. I think by the end of this year we'll see 80 bucks, if not 100. So, and that could easily trigger the market correction. So, yeah. Which no one expects, right? By the way, the last time oil took off like this was when? In 2008, right before the mortgage-backed security crisis and the crash in the stock market. So that triggered it back then as well. What triggers oil to go up so fast in price? Central bank. QE. I forgot to show you guys the other chart of housing starts. Back in 1971, there was a high inflation, those stagflation, which we're about to experience, which we're starting to already experience the beginnings of already. So we saw housing starts right before go really high, and then we had stagflation. Because of stagflation, nobody's built new homes because no one could afford to buy them. And then what happened to the housing starts? They crashed. What happened to the housing market? It fell back then as well. This is where we are at right now with housing starts. We can't even get up to that level. And why is that? Well, back then, the dollar was very, very strong compared to today. Do a comparative show. The blue line up here, up top, is new privately owned housing units started. The orange line is gold. DXY is on the bottom. You see the dollar went up. DXY did at least. From 1995 to 2001. And that entire time, yeah, gold was in a bear market. And then in the 90s, housing starts steadily went up. Matter of fact, they went up all the way until 2006, and then housing just crashed right off of a cliff. It started actually in December of 2005. I believe the Fed started raising rates then. Yeah, I wonder what started it. Gold just took off in 2001. Technically, you could say it took off in 1999 and just went on a huge, terrible market during the crash of the housing market. The dollar started falling in 2002 and it bottomed out in May of 2008. So the Fed's not going to raise rates because they can't. Because if they do, it blows up the housing market. But that doesn't matter. If the dollar keeps falling, keeps weakening against the rest of the world's fiat currencies, you're just going to see the cost of living rise and rise and rise, including gas, including everything, right? Utilities. And then states need money, and your expenses are going to go up. Your schools, they're going to want more levies, and the cost of, living in a home is going to just keep rising. And eventually, a lot of boomers are going to downgrade, and millennials need to upgrade, but they can't afford to. And then there you go. Housing crash 2.0. So it's not strictly. A lot of people are like Mr. Wonderful. He's out there with videos. Oh well, they're not going to raise rates anytime soon. So this housing market can run hot for years. Not true. If the DXY falls and the cost of living, inflation rises, people just can't afford it. Where are all the industrial jobs? Where are men going to find jobs? Matter of fact, how are people starting families when men can't find jobs? Women can for now, until automation and software algorithms come into play. You're not going to need that many people in HR, shuffling paperwork in cubicles, and and I don't want to get into it, but usually you make more babies when the male lion brings home the bacon, right? It's just a matter of fact. I mean, if the female lion's out there looking for food constantly, you can't. How are you going to raise baby lions? That's how I have to say it. You guys know why. All right, so I think this is temporary. That's what I'm saying about housing. All right, what else can we look at? Let's just look at gold and silver. Gold tends to go up with the price of oil as well. Where is it? I'll look at Bitcoin as well. Well, I called a bottom here. Is it over with? Is this it? And then gold's gonna sell off, and so is silver? I don't think so. Because the rest of the world's buying hand over fist, especially China. They just made it, they just opened up their markets for the imports of metals from around the world. That's why they're down in the rains of Africa, right? And a lot of geopolitical tensions. South America as well. So everyone's trying to get their hands on commodities, because whoever holds the resources will be able to continue building and producing and growing their economy in the future, and will be king, right? It's that simple. Things don't change ever. It's all about resources, guys. These two resources happen to be the one on the left, real money, real wealth. All central banks buy it. They're hoarding it. There's a reason for that. That's the only argument I really need. This one on the right, silver, I mean, you need it in your lithium batteries and the huge Green Deal build out and the EVs and everything, solar panels and whatnot. So that's why I think they suppressed the price. It's not just financial. It's I think they're loading up behind the scenes before they do lose control. Meanwhile, your retail investor and your average normie is buying RVs and Dogecoin and NFTs and nonsense. Granted, I do think that there is opportunity in crypto. There's this one crypto that I think... I'm not saying it's a great replacement for the market, the financial market. Without giving it away, I mean, it's the one in most demand right now. And if they adopted that one, then they wouldn't have to manipulate gold so much. You know? So, and then there's more opportunities coming out with that. So, speculation-wise, it's outperformed everything in the past 2 years. And then there's another crypto. I don't want to get into it, but I'm telling you, I think there's a huge opportunity. Another 100x or whatever. I got the last one, and I'm pretty sure this one will work as well. Anyways, that said, I'm diversified, right? I'm still in gold and silver. In the future, I'm going to be looking at robotics and 3D printing. Yeah, that's going to be down the line. As of right now, I just do not feel confident in this environment that we're in to invest in outside of like mining stocks and real resources. Yeah, I look at energy and agriculture as well, uranium, platinum, stuff like that. But, maybe 5 years from now, after the market crashes, chaos, and who knows, survive, then the world will move on. Humanity will move forward. We're just kind of in a rough patch here. Really, really rough. Really bad. But look at silver here. It's looking super strong. Huge bull flag. It's been holding up this entire time. Meanwhile, gold was selling off pretty hard. What does that tell you? That means there's industrial demand, not just financial. So all you need is patience, guys. Patience. That said, I do diversify. And so when gold's not going up, I mean, the mining stocks are still, some of them are going up, but when the mining stocks and gold's not going up, my crypto's going up 400x or whatever. So you could asset rotate. You could maybe not, just hold them all, and when one's up, you skim some off the top. When the other one's up, you skim some off the top, and then you buy the dips and the pullbacks. And that's sort of what I've been doing. I think that's it for now. I don't really want to look at the NASDAQ and the FANGs and the S&P and all that. There's probably a little more room for them to run. Then I'll talk about when they might correct, if they ever do. Who cares? Who cares, right? I'm just waiting for gold and silver to break out and my cryptos to take advantage of those opportunities. And that's really all you got to do. You just have to have patience. In my opinion, I could be wrong. Consult your licensed financial advisor. 20% off. Go to my website. Link is below the video. Now, if you're smart enough to click the other links and go into the chat room, and then you ask, how do I get into the private group? Wouldn't you go to my videos and look at the description section? It's probably the first link there, right? The first link is my website. Actually, the first link this time will be my website with the 20. You have to use that link to get the discount. And I'll put that in the description section. And I've gone over an hour. Alright guys, until next time.